Hey, everybody, welcome back to Project Overflow. Thank you so much for being with us. And we are right in the middle of our series when we're talking about investment, but we're focusing in this particular mini series here on one of those areas, which is on insurance or estate planning, okay, or financial planning. Okay, so if you've missed out on this whole series, please go to the description below and start from episode one of this series so that you can flow through. Okay, so we're doing this videos a little bit shorter now, between 7 to 10 minutes, so that it's easier for you to consume, but also it's easier for you to break up and know which part we're talking about where. All right, so let's continue with the discussion. It's really, really interesting. We stopped at, critical illness and personal accidents and the medical card, which is so important these days because the medical bill is actually getting quite costly, actually very expensive. Okay, but having said that, I'm really grateful and thankful that in Malaysia we are still one of the highest level in terms of medical facility and also knowledge around the world, in this region anyway, and one of the lowest cost. Okay, so you'll be thankful that we are here in Malaysia and we got really good medical personnel. Okay, and let's get back into this topic here. Zuan, we left off, and there are two other areas that we haven't covered in this topic when we talk about using insurance as a robot or as a slave for us so that it can work for us rather than work against us, taking money out of our pocket instead. Instead, we want it to actually now help us to put money into our future or our pocket. Okay, so we are actually going into these spaces. Okay, so if you notice when we talked about a personal accident, is when you have an accident and you need to go, you actually lose probably time or your physical ability, then the insurance will pay out the loss of the arm or the eye or whatever that may be. Okay, and then when you've got your medical card, it actually saves you from taking out your money to fund your time in the hospital. Okay, and the comfort, in terms of your bedding and things like that in the hospital, and the hospital that you can choose, right? So that reduces the possible costs if you need to be hospitalized, right? And then the other one is critical illness. So if you get a non-communicable diseases like high blood pressure, heart attack, a stroke, or now we're adding on, and Zuan did talk about this, having male specific and female specific, so gender specific illnesses that are critical illnesses. So ladies and men, don't just buy a generic one, because you can tailor it according to you. Now this will save you a lot of the money that you have in hand, so that you are actually buying that peace of mind there, if it happens as such. Okay, so now let's look at the other two portions whereby it now really adds money into your account. Zuan, what about a life policy? I think you talk about that. What do you mean by a life policy?
Yeah, life insurance is a life policy where when you are not around anymore, or when you pass away, or anything happens to you, the money will be paid out lump sum. Okay, so I think the first question I want to address is this. I People always ask, hey, why are you guys talking about insurance? I thought you guys should be talking about investments. But I think investment this is called the protection part in investments. So before you invest and grow your portfolio, or even or to diversify, the first level is the most boring one, which is called protection. And a lot of people don't even spend time to take care of this and want to jump into other parts of investment. That's why we are actually spending time to do this, because what investment is, we are buying, usually mentioned, we are buying time, or buying, investing into our future self, which is number one is health, right? We heard so many stories, even now, like COVID cases so crazy. um Entire life savings, okay, all spent and paid out to the hospital. And the even sadder cases is go and take out a loan or borrow money because don't have enough money, because the people don't plan this, right? And that's why we are taking time to get this protection part correct, meaning that we are protected against anything health related, which might happen for us, to us in the future. If it doesn't, it's also good, because if you really calculate out the cost to be insured, and versus paying out lump sum if you don't start now, it's very expensive. And yeah, and when we say start now is if you're young, the cost of insurance to get started when you're younger, the premium is actually cheaper compared to when you are older. Okay, so get that done. So that's something I want to add on before we move into life insurance. Okay,
Yeah.
so
Yeah.
life insurance is actually is also another investment. And what really sold me, convinced myself, I mean, like my life planner didn't sell this to me, but convinced me is this. Um, the life insurance is the purpose of it. If I'm not here anymore, can I take care of my family, right? So that is the purpose of it. The second purpose of a life, I actually have two life insurance for two separate purposes. Another one is if ever there's any debt that's unsettled, so that life insurance can actually use to be settled that debt. And also the third one is if there's no more debt, then I will have a plan to get this insurance to be invested into a cash trust so that it pays uh, throughout the generations instead of coming up lump sum. So that's the purpose of life insurance. And what really, when I do calculate the math, it really makes sense because so this is the calculation. Okay, maybe you can also go and answer this yourself. If you put 200 ringgit a month, okay, you save 200 ringgit a month. 1 year, that means you have 2,400 ringgit, correct?
Yeah.
Okay, and let's say you put into a FD, which is 3%. Now, not even 3%. Let's just assume 3%. Okay, 3%. So, how long does it take for you to save 1 million? How many years? So, it will take you almost 50 years to get there. Almost there, 50 years, or slightly lesser, but almost 50 years to get there. And assuming if you are 30 years old, 80 years, when you're 80 years old, only it becomes a million, right? I think lesser than 50 years. Okay. Let's say it takes 40 years. So 70 years old, only you get that million. But what happens in between, we don't know, right? There's 40 years of life there. And if anything happens to you in between, you don't get that 1 million. Okay. So if for me, if I put away, so for me, if I put away 200 ringgit into my life insurance now, I don't have to wait 40 years. I just need to wait 6 months for the cool off period to to settle, and I'm already a millionaire. Meaning I'm already a millionaire. Meaning as long as I put 200 every month into that life insurance, there's already 1 million ringgit there. To if anything happens to me, I have this to be passed down to my loved ones. So that was what convinced me uh, uh, to put money into a life insurance. And the calculation is actually this: the safe one is to have 10. Your life insurance should be at least 10 times your annual expenses, the value of it. So that is how I mean, like for me, why I use a life insurance, how why I see the importance of life insurance and why I use it to take care of what I need it to do.
Wow. Wow. That's simply amazing, right? So yeah, again, I learned something here, right? So the first objective, I think a lot of insurance agents may not, if they do, you have a very good agent, okay, but may not even themselves understand this, okay, because if you ask your insurance agent how much policy do they have in terms of claimable policy, right, and then you will know, how well and how do they structure their insurance policy. Then you may get a picture of how well they know about this. Okay, so the first thing that Zun talked about was it goes to paying off your debt. Okay, so first thing is buy a policy looking at your level of debt now. Okay, so if you're in business and you have a house loan, you have two car loans, you've got probably investment properties out there. What is the total debt size that if today you were to leave this earth, what is the debt do you pass down to your children and your family or your wife? Okay, so if you're gonna have a 3 million ringgit in debt that you will pass when you pass away, you pass down, then please have at least 3 million in one policy to be able to handle that debt, so it cancels out the debt, so that your family, now losing you, is already losing income, but it doesn't now put them in debt. Okay, and the second one is actually to be able to, pass down something from to the next generation or to the next of kin, that if you leave behind let's say a housewife, or you are significant amount in terms of breadwinning, then it will help out, at least for 10 years or 15 or 20 years or whatever it is, to help out, so that your spouse or your other half can now fund for the education and things like that, and have no worry, and can live out their life normally. Okay, so this, wow, fantastic. This is one of the best definitions I've ever heard in now 47 years of life. Okay, I think this is incredible. All right, we are out of time. We're going to come back and talk about how then do you make this perpetuate even after you're gone. Okay, so we'll come back and talk about it in the next episode. We'll see you. Remember, like and subscribe, and smash that subscribe button, so that turn on the notification bell, so that you know when we are up next, coming to you with information that is really, really to us is critical, and that's why we're bringing it to you. We'll see you in the next episode. Bye bye.